Universal parent Comcast and publicly traded cable stocks dropped Friday on Wall Street fears of slowing broadband growth post-COVID after the industry rode a wave of new signups. But in an industry update titled Cable, Going Negative, Wells Fargo Securities analyst Stephen Kihal says the market is pretty well saturated by now. Looking to the back half of the year, we begin to see cracks in the residential broadband growth story. Comcast, which Hollywood sees as one thing but many on Wall Street still view as a cable company, saw its stock drop by nearly 5%, a much steeper fall than the overall market, S&P 500 down 0.19%. Ditto with Charter. Altice, formerly Cablevision, was down by nearly 4% and Cable One by 3%. Comcast posted revenue of $103 billion for 2020, of which $60 billion came from cable communications, $28 million from Universal and $10, $2 billion from broadcast television. In comparison, Charter had total revenue of $48 billion and Altice of $10 billion. Kihal noted that broadband penetration of homes with an annual income of over $25,000 is 100%, so any net adds will need to come from market share gains in what's called new household formation. DSO, the service offered by telcos, has shrunk from about 25% of broadband subs 5 years ago to just 14% currently, so there is a lot less low-hanging fruit to pick off. We expect broadband net add growth to slow in 2022 plus. But more importantly, we think it portends a shift into a less profitable. The shift won't be immediate. He said the sector has benefited from a slower than anticipated reopening, as return to office mandates slipped and in-person learning was delayed. The first half was strong due in part to a temporary federal grant called the Emergency Broadband Benefit Program. It directs $3.2 billion to provide eligible households with discounts of up to $50 a month for broadband service. Charter attributed about 16% of its net adds last quarter to EBB.